2021 to 2022 is going to become known as the age of a couple different things. The beginning of a recession, the birth of the apes, and the birth of the rug pull. Now, you guys know how I feel about cryptocurrency and NFTs. I've kind of gone on and 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 on about this for a long time. I think that a lot of it is going to be a lot like the dot-com bubble, right? There's going to be quite a few of these different cryptocurrencies and NFTs that don't have any intrinsic value and end up going to zero. I think that's pretty, fair to say, and that because of that, since there is no intrinsic value, if it does get rugged, there's not a lot of opportunity to sort of pull yourself out of this hole. Well, today I wanted to make a little video about sort of the state of cryptocurrency and the risk of rug pulls and these sorts of things, because I don't think it just happens on a retail side, right? There are influencer shit coins that are made on a day-to-day, week-to-week, month-to-month basis or whatever, and same with NFTs, but it also happens on the institutional side. Institutions are able to leverage 100-to-1 money into cryptocurrencies that can inherently leave you in a much worse shoe than you would have been before. I think that blockchain's a great thing. I like the transparencies there if you can get a hold of wallets, but there are also inherent risks that I think are important to highlight, and I get asked this all the time, so I figured it's good to finally make a video on why I pretty vehemently sort of avoid cryptocurrency. So with that being said, I'm not a financial advisor, not financial advice, please take it with a grain of salt. Pardon the hotel room. I am in Minnesota right now for my sister's graduation. I've just got a little makeshift setup sort of rocking. So with that being said, let's get right into the video, not waste too much time. In case you're new to the market, in case you're new to all this stuff, rug pull is very simple. I'm going to read you off a definition that comes from Binance. A rug pull in the crypto industry is when a development team suddenly abandons a project and sells or removes all its liquidity. The name comes from the phrase to pull the rug out from under someone, meaning to withdraw support unexpectedly. Now, there are lots of technicalities that kind of go into a rug pull, but the easiest way that I can probably put it is there is something called a liquidity pool. Now, this is not taking a piss in a sink or something like that. Liquidity in this instance represents dollar signs, it represents money, and the pool is representing a collection of all of these different dollar signs. And that liquidity pool is supposed to back whatever sort of cryptocurrency or NFT you're investing in. Well, in a rug pull, that liquidity pool can get pulled from by whoever created the coin, whoever created the NFT, whoever's got access to the code. They can access that money and pull the project from underneath your feet. There's obviously more details of this if you'd like. Rug pulls are most associated with decentralized finance projects, which provide liquidity to decentralized exchanges. DEXs, DeFi tokens of new projects, usually aren't listed on centralized exchanges, meaning that a DEX is the only source of liquidity. You get rid of that liquidity, you get rid of the inherent value of the project, and this sort of thing happens all the time. I think the most well noted and remembered rug pull that has happened in recent times is Squid Coin. Now, Squid Coin was quite funny because it's sort of like a knockoff version of obviously Squid Games. The idea that there's really only one winner in the end, and people unfortunately fell for that, which makes sense if you think of the sort of risk you're taking. If you're buying into a coin that has no intrinsic value, you are just kind of taking a chance, right? You're hoping to catch the momentum, take it as a technical trade, and there's money to be made by trading cryptocurrencies. We've seen it. People have made great money trading that stuff. I know there was a Shiba Inu guy who made billions of dollars off of $10,000-$15,000 that they put into Shiba Inu. So it can be done, right? But the great takeaway is those are sort of diamonds in the rough. They're 1 in a billion chances, and they're hard to find. Now, is this me saying that all cryptocurrency is going to be bad? No, not inherently. I think there are going to be some that are good, right? But the question is always, does this provide intrinsic value? Is this something that can provide me value down the road? That's really the takeaway. And this is sort of bled into a lot of different things. You can see this here. I've talked about this before on my channel. But there was something called the AMC token, which was specifically targeted towards retail investors known as apes. Now, apes are people who like to buy and hold stocks. They like to gravitate towards a specific few names in the market, specifically AMC, GameStop, maybe BBIG, Prague, Bed Bath & Beyond, whatever it may be. And I think what is most attractive about apes to cryptocurrency scammers, such as you can see here with the AMC token that Adam Aaron is so kindly highlighting and thankfully legally pursuing, is the buy and hold idea, right? You can get someone to buy into your cryptocurrency, they hold it forever, no matter what happens, and they rug you and they take your money. And this is something that has popped up over and over and over and over and over again. The surefire thing about a rug pull is quite simple. You can guarantee two things. It's that they will always happen, and that people will fall for them repeatedly. And the more we can sort of be aware of these things, sort of the better off that we can be. But with that being said, it is very difficult to rug pull something that has intrinsic value, which brings me into this.
All right, now you guys know my opinion on cryptocurrency and NFTs. I think a lot of them are inherently going to go to zero, and some of them are decent. But we've all seen those rug pulls on cryptocurrency and NFTs. So how about instead, of buying an NFT or a cryptocurrency and having that risk on the table, what if you could actually buy a real piece of art that you can't rug? You can't rug a painting, can you? Well, with Masterworks, you can. By buying into a commodity art, you can actually combat inflation, which obviously the stock market struggles to do, as well as avoid getting rug pulled, as commodity art doesn't typically face either of those challenges. Furthermore, contemporary art has actually outperformed the S&P 500 by 164% from 1995 to present day, which is obviously phenomenal returns. This is much better than a lot of cryptocurrencies and NFTs that obviously get rugged. Obviously not all of them, but I mean, blind squirrel finds a nut every now and then. Even further beyond that, with the current market being very whiplashy and having sort of a bearish trend to it, contemporary art is much more stable. There's much more safe returns that are possible by buying into something such as contemporary art in the first place. Now, you might be asking yourself, Trey, I can't really afford to buy into Van Gogh. I can't buy Starry Nights. I don't have that kind of money. But with Masterworks, you can actually buy into these things. See, with Masterworks, which is, by the way, the only platform in which you are able to do this, you can actually buy into these paintings that were previously only available to billionaires and people who had tons and tons of money who could afford to drop hundreds of thousands or millions of dollars on a painting. You see, but Masterworks takes care of that problem for you. You see, how Masterworks does it is they go and they buy these paintings. They buy these paintings from Picasso, Andy Warhol, etc. And they make these pieces investable to the general public, people such as you, so that you can actually buy a piece of that painting and have obvious returns. I mean, you're able to get essentially a fraction of that painting's worth. Typically, the art is held until Masterworks thinks it is a good time to sell. So far, they have sold 3 paintings to date, and they have returned 30% to investors, which is drastically better than what the SPY has done so far in 2022, which is down roughly 8% on the year. It's not much of a contest. Kind of proving how Masterworks and, obviously paintings hold their value much better compared to inflation and compared to typical economic conditions. As I sort of alluded to before, you can also live trade shares of different paintings from Masterworks if you are not particularly interested in waiting for Masterworks to sell a piece of art. You can actually trade this market the same as you would the typical market, such as the SPY, or if you want to go play puts on Robinhood, you can do that too. These are options that are available to you. Now, I won't take up too much more of your time, but if you'd like to learn more about this, if you're interested in investing with Masterworks, who I'm very happy sponsored this video, you can actually go to the link down in the description box down below, or go to masterworks.art/tracetrades to get a piece of your own Picasso or your own Starry Night today, if you are interested in doing so. As I mentioned before, link is in the description box, masterworks.art/tracetrades. Back to the video.
So now that we kind of talked about, that and how you can avoid getting rug pulled by purchasing things with intrinsic value. Not limited to that, obviously. Not limited to Masterworks. Obviously, there's stocks and there's real estate and there's this and there's that. Let's talk really about the risks involved with getting rugged, because this is a form of scamming that is pretty rampant, really, in today's sort of markets. The rug pull, crypto investors lose $4 billion in new scam. This is coming from Financial Review. If you were to look at this, you can see cryptocurrency investors lost almost US $3 billion last year in an emerging scam known as the rug pull, where fraudsters lure investors into dodgy digital coins and run off with the proceeds. It's part of an 82% surge in scamming losses that triggered USD $8 billion worth of cryptocurrency stolen globally in 2021. And if I was to show you a different chart, what you're going to see is that this is actually new, right? If you look at cryptocurrency scams, you can think of the ones that you see on Twitter, right? You see people, having these fake profiles, and it's usually like very attractive Asian women. They message you in your DMs and they say, "Hi, sexy," and then you message them back and you say, "What do you want?" They come back with, "How is your trading going?" And then you message back like, "No, I'm not really interested. Thank you. I've got a girlfriend, whatever." And then they message back with a whole bunch of shit. "Well, if you give me $100, I'll turn it into 1 million billion," and people fall for that stuff. That's like your typical sort of crypto scam. Well, now it has gotten more advanced. This green category right here, which is rug pulls, is new to 2021. Now, I don't think rug pulls are something that are going to happen forever and ever and ever. I think eventually this sort of thing will come to an end. The feds are going to make examples of people. There's something that Jordan Belfort, like him or hate him, said in a Full Send podcast. He said, the gears of justice grind slowly, but the feds are going to make examples out of people who rug pull the retail investor, right? I think there are going to be people who are held accountable for this and are going to be made an example, but we're not there yet, which means we can protect ourselves from these sorts of things. And I don't think most of you guys, are too worried about it, but it is good to talk about nonetheless, because I am passionate about it, right? There's a reason that I avoid crypto, despite being asked all the time, and I avoid NFTs despite being asked all the time, and it's because I'm nervous about these sort of things, right? This is obviously a metric that's increasing year over year. I mean, this is really new, honestly. A couple $1 billion, $4 billion to rug pulls in 2021. Who knows how bad it's going to be in 2022? And this isn't necessarily including NFTs, which have a lot of the same characteristics. Does it provide intrinsic value? And if not, you have a risk of getting rug pulled. So if you're to read on, New York-based Chain Analysis, which is advising Commonwealth, blah, 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 said cryptocurrency-based crime hit a new high in 2021, rising 79% to US $14 billion, which is a lot of money, right? It's frustrating to watch. There's actually, more articles you can read on and on. Rug pull scams raked in over $2.8 billion in crypto in 2021. What I find actually be the coolest is Web3. Now, this is a website that I can actually link in the description box down below, but what Web3 does for you is actually keep you up to date with messages that are kind of going over some of the cryptocurrency scams that happen on a day-to-day basis. You can see here, May 4th, 2022, Juno accidentally transfers $36 million in seized funds to inaccessible wallet address. Attacker compromises mm.finance to redirect $2 million in crypto assets to their own wallet. Ape holders can use multi-slurp juices on a single ape. It goes down the list. And the runoff here, the joke is Web3 is going just great, and I laugh at this. And it's definitely not an enormous grift, that word, that's pouring lighter fluid on our already smoldering planet. Now, I really don't think that all cryptocurrency is a scam. I think that if it doesn't provide intrinsic value, you should be very nervous, and you should be asking a question. And I do think that the buy and hold mentality can be targeted by people within the cryptocurrency community. And that's why I find this to be important to talk about. Specifically, what really made me think about this was that Adam Aaron came out publicly and said, "Hey, this coin's a sham, the AMC token, blah, blah, blah." It goes on and on and on. I thought about this, and I thought, if retail is taking advantage of retail here, what are the institutions doing? They're probably taking advantage of the retail who's taking advantage of retail. They're butt fucking us both ways, Don't be fooled by this stuff. It's really important to keep your eye on, because these things are going to continue to happen until the feds make an example of people and regulation comes out. Watch out for the rug pull crypto scam that's tricking investors out of millions. I've got this pulled up. This goes over, what a rug pull is, how it can happen, looking at the liquidity, which is the liquidity pool, what I'd mentioned before. And I suppose if I was to give you any grand sort of takeaway for the entirety of this video, let me switch over to my full screen quick. What I would tell you is this. I would much rather be late to the party I would much rather be late to the party on cryptocurrency and on NFTs, because if you're early and you're wrong, you lose everything. I don't like the risk of that. I really don't. I think it is worth making a little less money to make sure that you're not getting scammed. What I've always said about crypto is it's either going to be the greatest innovation of our lifetime. It's going to change the way that finance is looked at forever across the world, or it's going to be the greatest scam that we've known in our entire lifetime. And I don't know which one it is yet. What I do know is that I've seen probably more scams than good coins. But that doesn't represent all coins. Let that be known. There are good projects out there. There are good coins out there. There are good NFTs out there. But it's important to watch your back on this stuff. I really hope that nobody falls for this AMC scam token that's very obviously just ripping off AMC and trying to take advantage of retail psychology. But you never know, man. And that's why I made this video specifically, and I hope that that helps some people out there. So that's what I got. Sorry for talking quieter than usual. Like I mentioned before, I'm not going to say it twice, just in a different environment. So there we go. Yeah, it is now 5:20 in the morning. I haven't slept in quite a while, and I'm going to get some Z's and then and go watch my sister's stuff tomorrow. So catch you all later. Appreciate you watching. Much love, like tabs. Peace.